Good morning, ladies and gentlemen. This is Butch Shorak, Options University. This is Market Recap for Friday, October 12th, 2012. Access to this video is for educational and informational purposes only. Nothing contained in this video, website, or promotional material constitutes a promotion, recommendation, solicitation, or offer of any particular investment, security, or transaction. Options University provides educational services that are meant to teach you the risks and rewards of trading stocks and options, and we are not a service that tells you what to trade. We're not implying or guaranteeing any profit, and as always, do not trade with money that you cannot afford to lose. As we look at the week that has just taken place, we see that during the week we've had a few announcements that certainly could affect the market. Jobless claims certainly came in better than ever in spite of the fact that they might be tainted numbers again. Those tainted numbers came from the fact that California may have failed to send in their numbers, which could put a squatch on what seemed to be better than expected numbers. As Friday, October 12th rolls in, we still have two huge numbers to look at on Friday. Producer Price Index, PPI, takes place at 8:30 before the market opens. It certainly can affect where the market opens. And we see consumer sentiment taking place at 9:55 before that magic 10 o'clock hour when, well, we see lots of news come out. So as we go into the open this morning, we see that futures are relatively flat, and we've had quite a week during the last week. The Biden and Ryan clash took place. They clashed sharply on foreign policy, economy in their debate. We've already had last week the Obama Romney, and we see things changing rapidly on the national front as the economy takes the front seat and we head into what could be the biggest election of our lifetime. How can you see what's happening, what's taking place? Well, one of the things that we'll be looking at during the next week is we'll be looking at earnings, as we have a huge week coming in earnings next week, and we'll see how they develop and how long our large corporations and companies can keep cost cutting in order to keep their earnings up in a slowing economy. And that's the question that we're going to have answered during the next couple of weeks as we see these earnings and revenues coming up. And one of the things that we will most likely will see is that we'll see these companies talk about slowing, talk about concern about the future. We've seen General Electric, United Technologies, Caterpillar notched in some impressive earnings so far, in spite of the little bit of a shaky economy. But how long can they keep doing this just by cutting costs? They certainly have done an amazing job, as the corporations were well prepared for this. But as we look forward, cost cutting can only go so far. We need economic growth, and we'll see what happens. Our fiscal cliff is not currently priced into the stock market, and that may have an effect. But looking at the last week, what we see is we see an economy we see a stock market that only knows basically one direction, and that trend is up. Now, we have dipped below the 30-day moving average and are looking at a potential sideways trend, but so far we're still going to call this an uptrend, and certainly Friday and Monday could end up being two crucial days as to whether we have a trend change or not. This is the first time in many months that we've actually dipped below that 30-day moving average. So we're thinking about calling this a sideways trend, but at the moment we're sitting on support, and we'll see which way we're going to be moving. As we look at the week so far, the first 4 days of the week, we have been in a down cycle and have pulled a bit below that moving that magic 30-day moving average in this uptrending market. So we are on the brink of changing from an uptrend to a sideways trend, and a dip below this level will be a confirmation of changing to a sideways trend. All right, with that fact in mind, let's look a little more careful at the week that was, and we see that every single day of the week we saw a pullback, normal cycle pullback, trading within a trading zone and looking very much like we're heading into a sideways trend, as we have a high here, a low there, little bit lower high there, but pretty much the same. And we have a low here. And what happens in the next few days will be crucial as to the trend that we have. Looking like we could be headed to a sideways trend and having a bit of a pullback. Earnings will have a big effect on us. Next week will be options expiration week, as it'll be the third Friday of the month, and these two will be interesting to watch as we watch this develop in this presidential year, which has certainly been a boom to the stock market and held it up well as we head towards a new or a changed or a some kind of presidency that will provide for us leadership heading into the next 4 years. With that thought, let's take a look at the Dow and see that Dow is at exactly in the same position. We have a single top, double top, triple top, and we have a double top on the bottom side, and we're sitting right at that 50-day moving average, trading within a sideways trend, and we'll see what's going to happen again in another crucial place where we're going to see whether we go from a uptrend into a sideways trend and potentially even into a downtrend. However, remember that the fourth quarter is usually the strongest quarter of the year, and we'll see what's going to happen to us as these earnings unfold. All right, so the Dow still trading within its trading range, as we can see depicted by our yellow zone. Next, let's take a look, see what the NASDAQ has done. The biggest move for the year comes out of the NASDAQ, and let's see what it has done during the past week as it dipped below the yellow trading range there into the previous one, and we'll see whether that continues. But remember, we generally get more movement out of the NASDAQ than we do out of the other indexes. Russell also is one that gives us a great deal of movement. Looking at the Russell, we see that we have gone from this zone right in here and have dipped down below to that 50-day moving average. We'll see whether that acts as support, and our earnings and revenues for our major companies will certainly provide some insight as to where we're going. Watch these charts carefully as we are in the brink of changing the overall trend of the market. Will it kick back up? Earnings will be something that will give us the answer to that. And we will go into that strongly next week in options expiration week. Looking at the VIX, we see that we're still not a lot of fear in the market. It has risen a little bit during the week as the market has gone down, but that's completely normal and much of what we expect. Notice that yesterday we had a lower high and a lower low on the VIX as some of that fear came out as we may have hit some kind of bottoming point and getting ready for a bounce. All right, let's see what happens with the bonds, and we see that the bonds have continued in this downward cycle that they are in, and it's at the top of that cycle. With confirmation and market cooperation, you might look for pullback in this. So look for that buy signal with lower highs and lower lows coming in the bonds as we're trading in a quite tight range. We actually have a bit of a triangle taking place with the bond market, and it's going to break one way or the other. Watch carefully. If you get that break with volume, that gives you certainly a potential for a trade in the bond market. We look at TLT, which is our ETF for the bonds, and gives us an indication of where that market is going. Looking at our next sector, let's take a look at the financials, which we're looking at XLF, our spider ETF, and we see that the XLF has held up very strong, trading higher in that area, and we've got some key earnings coming out this morning with JP Morgan and Wells Fargo, two of our stronger banks that are sitting out there, and we'll see what kind of numbers they come in with this morning before the market opens to give us an idea of where this economy is headed. Now let's take a look at oil and see what oil has done as the dollar has weakened some. Oh, look at what happened. The oil has increased a little bit, not at its previous highs up there, but we're seeing the dollar weakening this week, and therefore the representative of oil has gained its its momentum to the upside. All right, did hit resistance, and we'll see if it's going to pull back. Look for that. We did have a doji on Thursday. Look for higher highs and higher lows, or lower highs and lower lows as a potential pivot and potential a little more of a pullback in oil. Again, have an effect on this is the dollar as it has weakened during the last week. All right, now let's take a look at gold, that haven for safety, and it has followed the same way that oil did, and it was at a previous high for the last 3 months, and we see that up almost to that $1,800 mark in the actual gold market, and we see that our GLD, our spider ETF for it, did pull back with the market during this past week, almost came back to that 30-day moving average, and we got a what I might call a buy signal is we got a pivot on Thursday with a higher high, higher low. With follow through today, we could expect to return to that same level that we showed earlier in the week. All right, so that's the sectors that we've been looking at. Now let's take a look at the amount of volume. What kind of volume did we have in this pullback? Well, it basically looked like huge moves, bigger moves in the market as we pulled back during those 1, 2, 3 days. Yesterday was interesting in that we had a gap up, got a higher high, did not get a lower low yesterday, but the weakness was shown throughout the day as anticipating maybe the PPI and certainly anticipating the debate that was taking place on Thursday night between our vice presidential candidates, and it was not able to hold on to those gains as we had a 78% retracement on Wednesday's candlestick, even in spite of the fact that we opened up with some good news, which came to us from the employment numbers. Turns out that those numbers during this election campaign may have a bit flawed, as California failed to get their numbers in, and so in spite of the high during the first hour on Thursday's trading, it just kept pulling back as the day went on, closing very much at the low of the day going into our vice presidential debate. All right, with that thought in mind, those of you that are gold members, stick around. We'll take a look at our stocks to watch, see how they fared in this pullback week, as we saw nothing but negative numbers coming out this week in what one may consider just a normal pullback in a trending market. And so for those of you that like these videos, you might go to www.optionsuniversity.com/free gold and view other videos that are there from Options University. So with that thought, this is Butch Shorak, Options University. It's Friday, October 12th, 2012, heading into the heat of earnings season, heading into options expiration week. As we look at the week that comes on Monday with market forecast, one thing for sure, something will happen. It's our job to respond to that, and thank you for being here.